Hi, this is Iris, a realtor and landlord in the Pioneer Valley, Massachusetts. Today, we'll talk about the bottom line numbers of an investment property. We'll talk about a cash flow and the cash-on-cash return. In our last video, we went through NOI, net operating income, and the cap rate, the capitalization rate. NOI and the cap rate are good indicators of the performance of an investment property. However, NOI and the cap rate don't count the debt, mortgage in this case, and it doesn't consider capital expenditure, CapEx, either. For buy and hold long-term real estate investors like myself, cash flow and cash-on-cash return gives a more complete picture on quality of investment. Cash flow is what you put in your pocket at the end of the day. It equals the net operating income, NOI, minus your mortgage, and minus capital expenditure, CapEx. CapEx are funds paid for major upgrade and the major maintenance of the property. Once we know our cash flow, which is what comes in minus what goes out, we can get the cash-on-cash return. Cash-on-cash return measures the return on the actual cash invested, and is probably the most important return on investment, ROI, we need to look at. It is simple. We just divide the cash flow by the total cash invested. The total cash invested is our down payment, plus the closing costs, plus the cost of rehabilitation if the property needs to be fixed up. Let's look at an example. I saw a fixer-upper 3-bedroom house in a good neighborhood a while ago, asking for $210,000. I did some quick estimates and feel that I have to put in another $30,000 to fix it up before I can rent it out for a return of $20,000 a year, assuming 95% occupancy rate. If I pay cash, the cash-on-cash return is the cash flow in, $20,000, divided by the big chunk I have to put in. And the cash-on-cash return is 8.1%. If, on the other hand, I borrow 80% of the $210,000 purchase price for a 30-year mortgage at a 3% interest rate, now my cash flow is lower since I have to pay the mortgage, which will be $8,500 a year. But my total cash invested is much lower, since the bank invested 80% of the original purchase price. The cash-on-cash return this way is 14.8%. I'm going to borrow the bank loan to buy this property. What is a good cash-on-cash return? People have different opinions since they have different needs. Some say about 8% is good. I like my cash-on-cash return to be higher than 10% since I'm a full-time realtor and an investor. Well, that's it for today. Thank you very much for watching. See you next time.